Hi, my name's Craig Foster. I'm the CEO of Ondo InsurTech PLC, and we're creating the world leader in claim prevention technology for the home insurance industry. We've got a proprietary solution that solves one of the insurance industry's biggest problems, and that's the problems caused to homes by water damage.
Okay, so who's your customer then?
So our customer, Matthew, is insurance companies. So we sell our solution to some of the biggest home insurers around the world.
Okay, so we've got to get terminology and so forth out of the way. So when you talk about claim prevention technology, what is that?
Yeah, okay. So if you think the traditional insurance model is to basically just price risk and then wait for it to happen and then pay out the claims, as that risk manifests. We're entering a new world where technology is enabling insurance companies to actually try and proactively manage that risk and reduce the risk profile. So it's another way for insurance companies to gain a competitive edge. So I guess it's the same thing, Matthew, you've seen in car telematics, for example. If you fit a black box, it can actually reduce the chances of a young driver having a crash. There's examples in life insurance where some life insurers are giving people Apple Watches and encouraging them to have like gym memberships and things like that because they actually become a better risk. So it's those types of initiatives. So we're focused on delivering similar types of solutions, specifically within home insurance.
Okay, but we're focused on water. That's your specialty?
Yeah, that's where we're starting. Yeah, the ambition of the company is broader than that, but it's a great place to start because it's one of the biggest perils on home insurance, and we've got a unique solution to that problem that delivers an ROI, and it's genuinely scalable, and that's why we're the winning solution in the market for that one particular problem. Okay,
so we're talking about LeakBot here. That's the kind of proprietary technology you're talking about. So what is LeakBot?
Well, if I start with the problem, so if you think, Matthew, in your own house where your plumbing is, it's kind of hidden. You can't see it, right? It's in the walls, it's in the ceilings, it's hidden from view. And what happens is when you get a leak on that plumbing system, you can't see it to start with. So it starts dripping. It'll sometimes drip for weeks or months before you notice a problem. And at the point you notice a problem, you move a bit of furniture for some reason and you can see damp behind the wall. Or you take everything out of a kitchen sink one day and you realize that the kitchen units are moldy at the back. And it's at that point that manifests as a claim for the home insurer. So to give you a sense for the kind of quantum, in the United States, there's $17 billion of claims every year. And they're not particularly dramatic claims. They tend to be relatively small leaks to start with that have caused damage for a period without anyone noticing. And then the average claim in the United States is about $14,000 when they happen. So it's one of the biggest perils on home insurance. It's a consistent problem around the world. And we've got a unique solution to that problem with our LeakBot water damage prevention system. So it's unique for two ways. One is the sensor. So we developed a new way of detecting leaks on a pipe. So I've got one here to show you. So if you think where your stop top is in the property, Matthew, right? You've got like it'll be under a sink or in a basement or something, and there's like an incoming pipe, and then the device is basically like a small sensor. So we just send this in the post. It comes free with your home insurance. It's got like a clip on the back. You clip that to the pipe, so no plumber. You don't have to cut the pipe, and that unit can detect a leak anywhere on a mains water system. So the sensor's unique, but then it obviously connects to our back-end systems. You've got an app on your phone as the homeowner. The other thing that's unique is if we detect a leak, we then send one of our employed plumbers into the home to go find and fix the root cause of the problem. So that's also very unique in the industry. So we actually send a plumber into the home, and it's all no charge to the homeowner. So the insurance company pays us a recurring fee in the background to provide that service. And why do they do that? They do that because we deliver a return on investment on that fee. So we basically just prevent more claims than what it costs to deploy our solution. So we're doing that with 24 insurance companies around the world. And all the recent growth has really come from the United States, where this is a big problem in the US, and there just isn't a solution that really does the job for US carriers. And that's where we've really got an exciting kind of prospect ahead of us at the moment.
Okay, so before we kind of jump into the commercial component, in terms of the technology itself, that you own that 100%, that's proprietary, 100% owned by you?
Yeah, it's 100% owned by us, patented. So we own 29 patents around the world on the core technology, and it's entirely unique. So there's some solutions in the US that you find in kind of high net worth households, and it's about the same level as accuracy as our system, but the plumber has to actually physically cut the pipe. So you need a professional installation, and the solutions are often $400 or $500 on top. So they're very expensive. There are some acoustic sensors where you can clip a technology to the pipe, and it essentially listens to the water flow, but they're really not very accurate. They can only detect a high flow of water. So ours is unique because it can detect a very small leak down to about 5 milliliters per minute, but it's low cost. You send it in the post, you just clip it to a pipe. Anyone can install it. It takes about 5 minutes.
Right. So, but what it's like, how does it work? When you say you can detect a leak 5 mil per minute, it's not acoustic. It's not measuring water inside the pipe. It's measuring activity outside the pipe once the water's left the pipe somehow.
Mm-hmm. Yeah. So the way that it works, it's deceptively simple. But we invented this core concept, and no one else can use this same idea. So it's measuring, there's a temperature thermistor underneath this sensor here. So when you clip it to the pipe, it's measuring the temperature of the incoming water as it comes through the pipe. Now there's another temperature thermistor in the unit that's measuring the ambient temperature where the device is located. So the simple kind of scientific idea here is that every time you use water, the water's coming from underground through the pipe, and it's usually colder than where the device is located. So the algorithm on the device is measuring this relationship between the two temperature readings. So when you draw water, this pipe will go cold, and it can be a very small draw of water, but you'll still notice that the pipe's colder than the ambient air temperature. Now, as soon as you stop using water, the water is stood still in the pipe. And so physics will tell you that every time you can absolutely guarantee the pipe will go back to the equilibrium temperature. So if there's a tiny leak, there's a permanent draw of water through the pipe. So there's a permanent temperature differential. So our algorithm is always looking, do the two lines go back to an equilibrium, or is there a permanent delta? And if there's a permanent delta, it's a sure sign that there's water continually flowing somewhere in that property.
So is there a certain time of day where it's more accurate than others? And
not really a time of day when it's more accurate, but if there's
what I'm asking is when water stops flowing,
yes,
that's the time.
Correct. Yeah.
Right.
So if there's lots and lots of water usage, busy time of day, and there's taps running and people are cooking and someone's in the shower, there's constant water usage all the time. Every time water stops running, the algorithm is looking for the signature curve. But it probably needs about an hour of uninterrupted without someone else using water. Yeah. But typically in a day, there's lots of moments throughout the day where the house is quiet for a bit. People are asleep at night time, early in the morning, and every time it will just measure that curve and see and confirm that the property's leak free.
Got it. That's what I was going for. Okay. Okay, that's really interesting. Now let's get on to kind of the commercial components, and I will do some work about what the competition looks like. So let's talk about money. So when you're talking to a utility and saying, look, utility, when you're talking to an insurer and saying that we can save you money in the long run, what's the equation that you're doing for them, and what's the saving? Because there's a lot of data you'll have, but there's a lot of data you probably don't have. So do you work with them on that?
Yeah, absolutely. So so to go through the kind of basic economics, if you there's how much does water damage claims cost an insurer? It all depends on the cohort of customers. So we work with some insurers in the US, for example, and we work with some of the largest high net worth insurers in the US, and their average claim value is sky high compared to the market average. So the return on investment is a lot lower threshold for a high net worth insurer. However, if you take the US, Matthew, and just look at the market average economics across the United States, the frequency of a claim is about 1.6%. The average claim is about $14,500, something like that. So the underwriting cost per policy, so for every home insurance policy written, there's about $220 of risk associated with water damage claims. So we charge US insurers $5 a month on average, about that amount, for our solution. And that's a fully loaded cost, all-encompassing cost. So for $60 a year, you can deploy our solution without any additional cost, and we can find and fix those claims that on average, on a per average property basis, are costing a US insurer of $220. And that was if it was entirely untargeted across the base.
Right. So $60 all in, that's the hardware, software updates, and well, whoever goes and visit, your guys that may go and visit this, I'm assuming you outsource that or a third party to come and fix the problem if it's identified, yeah?
Yeah.
And how does the software identify where the leak is? It says, okay, there is a leak. How do you work out the where bit?
Yeah, well, the software won't tell you where the leak is. And that's where some good old school plumbing comes in with some kind of new technological twists, actually. So the way that the user journey works is we'll notify you to say that you've got some kind of a background leak. So what normally happens, a lot of the leaks get fixed by the homeowner because they look around and they'll normally, 60% of the time, I'd say, find the root cause of the problem themselves. So typically, you've been watering the garden and you've slightly left the outside tap on. We'll pick that up as a leak. You go turn the tap off, it goes leak free. So the customer will oftentimes find the root cause and solve it themselves. When the customer feeds back on the app and says, look, I've checked we tell them, look, check here, check this, check, can you see water running down the back of the toilet? If they check everything and say, no, I still can't see a leak, then we're much more worried about those properties because chances are they have got some kind of a background leak that they're not aware of. So we'll encourage them, book one of our plumbers, and we'll come and we'll check the property. Now, at this point, the homeowner is normally a little skeptical because they'll say, well, I can't see a leak. Do I really believe that there is one? And also they're a bit skeptical, like there must be a catch. I'm going to get charged somehow, somewhere for this. So we really have to put their mind at rest and say, look, there is no charge for this. It's paid for by the insurance company. Just let us come and we'll double check the property, give you some peace of mind that there isn't anything to worry about. So we send one of our guys, they turn up in a LeakBot uniform, in a LeakBot van, and they carry some pretty interesting technology that we also invented and patented, and it enables them to pressure test the property in real time. So they can tell what is the live kind of flow rate of the background leakage on the property. And this is great because it's binary. So we know that we found and fixed really the root cause of the problem. So how it works is they set up the test. They'll look around the house. They'll find something that's leaking. They'll fix it, run the test again. Sometimes it will say leak free. We leave the property. We'll show them what we fixed and we leave. Sometimes it will still say, no, there's still a background leak. So they'll keep going until they fixed all the leaks and the property goes leak free. So at this point, the homeowner's super impressed because we've fixed a whole load of things that they didn't know were wrong with the property, and it hasn't cost them anything. So we've got over an 80 net promoter score in every single market that we operate in, close to a 5 out of 5 customer satisfaction score. And you can go online yourself and read the customer reviews on something like Trustpilot and just see what customers are saying. So it's very compelling customer experience. And of course, that's valuable to the insurers as well, because customers with a LeakBot are much more likely to renew their home insurance policy after they've experienced it. So the plumbers, to answer your question, Matthew, the plumbers are just trained in how to deduce where the leak is by isolating different parts of the system to find the hidden ones.
Okay, so back with insurers, you've gone in and done a job and you said, right, well, I think we can save you some money here. And they've said, right, that works for us. What's the kind of ramp up phase, in terms of testing it, proof points, etc.? And then, is it a case that they issue the hardware and software free of charge to all of their customers, or is it mandatory, or is it a recommendation from them to their customers? Yeah,
that's a great question. So there was a few kind of sub questions within that. So I'll try and hit upon all of your points. So the kind of traditional way that our partners have offered the solution is as an opt-in, normally over email. So they'll send an email to their customers and say, hey, this is now included with the policy. Would you like one? Click the email, and then we'll send them one in the post. So when we do an email like that, typically on a single kind of email campaign, we'll get anywhere from a kind of 5-6% response rate up to about 20-25% at the other end, depending on how engaged the customer is, normally with that insurer's brand. So that's the normal way that we've done it in the past on a kind of opt-in basis. The other part of your question is insurers will often want to start with a certain volume and then expand from there. We've actually been doing this for 5 years since we launched with Hiscox in the UK. And all of ours, going back to Hiscox in the UK, Top Denmark in Denmark, they're still trying to put more devices out and push it as hard as they can through their customer base, which tells you all you need to know about the efficacy over time and the claim savings that they see. What we're seeing is slightly more innovative things of late on how do you kind of drive a kind of faster penetration into a customer base, and what are the other kind of techniques. So especially in the United States, we're seeing a bit more innovation. So with partners like Nationwide, who are the 8th biggest home insurer in the US, they ran a pilot in the single state of Ohio, and then said they wanted to expand into their customer base. We thought they were going to go into 4 or 5 states. They wanted to go into 16 states. They're now in 17. And they're experimenting with lots of different ways on how to encourage customers to adopt these kinds of solutions. For example, they ingest all the data from our API, offer customers a discount for installing the device, but the discount is conditional on them seeing over the API that you have installed the device successfully. So I think that's the kind of direction of travel. We do expect people to start to make these types of solutions mandatory, and there are carriers already kind of experimenting with that type of thing.
Okay, so everyone's a winner there. What you're saying is that the insurers will then potentially offer the insuree some kind of discount if they install it, because there's a benefit to the insurer if they do.
Yeah.
Yeah. Okay. Do they try and profile the types of homes that are more likely to suffer from leaks, whether they be super old properties or, maybe even some of these new builds, which perhaps have slightly lower standards? I mean, is there a kind of profile for the optimum return for the insurer?
Yeah, I think it's all depends on the individual insurer. So in the UK, customers pay a lot less for home insurance. It's a kind of skinnier product. I mean, to a quite unbelievable degree. So in the US, the average policy premium for a homeowner insurance policy is $1,400 a year. In the UK, I think the average price we're paying here is about £350 for a policy. So a massive difference. So with UK insurers, unless it's a high net worth insurer, we're often targeting a cohort, going after a kind of higher risk cohort. In Denmark, we've seen a particular problem of 1970s properties, just the type of plastics that they were using at the time. So we've had partners there kind of target certain cohorts of customers. The interesting thing in the US is the amount that insurers are spending in the US on water damage claims is so big on a per property basis that it kind of works on a mass market basis. So they don't even need to do the profiling. So if you take the big insurers, we've signed 3 top 20 insurers in the last year. One of them being one of the largest insurers in the US. And so those guys are not doing any kind of profiling. Nationwide, for example, are just offering it across their customer base.
No, I think what about for you? There's obviously a hard. You own it; it's proprietary, but you've got to get this thing made, and there's a cost to you. So what's the kind of payback on the hardware? And then also, I'd sort of be interested on the software component. And how do the insurers buy for this thing? If you took on typical software, you sell seats or user licenses in single or batches. So for an insurer, because you don't want to be like saying, oh, we've issued it to someone, you've sent it to someone, they've started using it, there's another $5 a month I've got to bill. That could be a very painful process. So is that kind of bulk package deal?
Yeah. You kind of second guessed how we do it, Matthew. So we manufacture the devices, the actual sensors in the UK. So we've got a contract manufacturer in Bedford. So we export them from here to the Nordics, to the United States. Without giving away our exact kind of cost economics, we've obviously got the hardware cost as an outlay in the first year when we deploy a device. We've then got the cost of sending the plumber. Now, the insight there is it's actually only a small percentage of customers that actually need an in-home visit. So it's not as big a proportion of the cost as you would imagine. And it also reduces after the first year as well. So we kind of find a lot of kind of pre-existing leaks, and then the frequency in the out years is less. So the basic economics is we're kind of single digits P&L margin in the first year. But then we have a much healthier margin from year 2 onwards, typically 70-80% once the customer gets into year 2. It suits the insurance partner as well. In kind of early phases, we had a much more complicated pricing model where we charged a device fee and then a software fee and then a price for a repair. Too complicated for the insurer. They couldn't work out in advance what it was really going to cost. Whereas they like this model that it's a flat cost. It makes sense at that price, and they know in advance exactly what it's going to cost them.
Okay,
now,
sorry, go on.
The thing that we wanted to solve, Matthew, is the working capital issue, because with a flat price, if we were just actually getting cash in on a $5 per month basis, we realized quite quickly when we ran the numbers that if we grow, we're constantly going to be coming back to the market. And myself and the chairman did not like that idea, because we've invested a lot of our own money in the company, and we didn't want to, constantly be diluting the company and the shareholders out in order to grow. So we basically designed a model where when we do a deal with an insurer, we set up a master services agreement that facilitates subsequent orders under the MSA. And when they sign an order, it commits them to a certain volume of devices. And what we say, the standard payment terms are they pay us the first year fees in advance on 30-day terms once they sign the order. So we take that as a prepayment, and then as they deploy devices, we kind of take the $5 per month fees off the prepayment until it's exhausted. And the key thing is, once they've deployed that volume of devices, and they could deploy it in a few months, they sign another order. It's the same payment terms on order number 2 and order number 3. So even if they haven't exhausted the first prepayment, they still got to pay another one, because we're shipping more hardware that's costing us, real cash. And if we do it that way, it fully funds our working capital as we grow.
Okay, so that's good. That data is there and obvious. It's been shipped. Someone said yes, that you've shipped it. It's installed, and you're tracking it, which is brilliant. You've got to keep those customers. I assume you have not lost any customers since you've started. Is that correct?
Yeah, that's correct.
Okay, so in terms of we don't need to worry about what's the drop off because you're dealing with you're dealing with an enterprise. So for them, you're saving them money, and as long as they believe that this is worthwhile, they'll keep kind of paying those bills. So, what is the data that you send them to encourage them to kind of keep pushing us to the rest of their customer base? And how often do you do it? What's that customer care look like?
Well, they receive a lot of data from us, which is very useful to them, because if you think this is one of the biggest perils, insurance companies love data to be able to price the risk. But for water damage, they don't have really a lot to go on. So the things that a standard insurer will look at to price insurance risk is just how big is the property, how many bathrooms has it got, so just how much plumbing is there likely to go wrong. And has they had a previous claim on water damage, but beyond that, there's not a huge amount to go on. So we tell the insurers quite a lot about the property, and obviously they can see the history on, has that property got a live leak? Did the customer do anything about it? So we provide all of that on APIs. They can ingest that all into their back-end systems, and they can also access that through various dashboards. In terms of the specific claims that we mitigate, every time our plumber completes one of those, finds a leak that's causing damage to the property, our systems are gathering data from the field through the app that the engineer's using. So we train them a bit to think like a loss adjuster. So when they fixed a leak that could have caused damage to the property, let's say it's upstairs in a bathroom. Let's say there's a feed pipe into one of your toilets, Matthew, and they fix that. What we're training them to do is to then go downstairs and work out what room is underneath that bathroom and take a picture of that room. Because what we realize is when we show that to loss adjusters at the insurance company, they can very quickly kind of attach a claim value to that and say, oh yeah, we see that all the time. If that pipe would have burst in 2 months' time, 3 months' time, and flooded that downstairs, that could have been a £50,000 claim. So we provide all that information in what we call RAP reports, and we send those to the insurer. So that's one really good way of calculating the return on investment as we go along. The other thing that the insurers will do is they'll analyze the with LeakBot cohort against a cohort of customers without a device. And that's the other way of kind of checking the ongoing claim savings as the kind of sample sizing increases.
Interesting. What's the turnover?
Turnover, we just announced. Well, I gave a trading statement for our full year results, so we're just under kind of 4 million revenue for the year just gone, ending March. But we've got annualized contracted recurring revenue of just under 6 million. So as we sign the deals, there's contractual commitments for the partners, and then most of it is on a recurring basis now. So there's a kind of backlog of devices that we're deploying at the moment.
What's the biggest cost item on the balance sheet?
The biggest what? Sorry,
cost item. Where are you spending? I'm assuming you're not making money yet. You kind of just starting out and ramping up and growing, and that costs money. We don't need to be making money at the moment, but so I'm interested in sort of where you're spending money.
Yeah, so the single biggest cost item is the actual hardware cost of the devices as we grow, because that hits the P&L as a one-off cost. So that's the single biggest cost item. We're you're correct. We're not quite cash flow break even at the moment, but we're not far off. And we've said publicly already we think we'll hit EBITDA positive trading at the end of this new fiscal year that's just started. Okay,
and then the cost of sale component to this and the size of that team, because you talk about multiple jurisdictions here. I mean, it's pretty impressive. It's not just some small UK operation now. So what's the team look like?
Yeah, I mean, it's a relatively lean operation still. So in terms of management, it's quite a tight team. So in terms of managing the customers and sales, we've got 2 people in Europe who manage the partners over here, 3 people in the US, and then I spend a lot of my time talking to our insurance partners as well. So we're in, when we did the trading update recently, we said we were in 151,000 homes. Obviously we're in a few more since then. So that gives you a kind of idea for the scale. I mean, that number's grown 60% year on year at the moment, and we expect that growth rate to accelerate as we make more traction in the United States. But, we don't think we have to scale the overhead a lot to do it. So although we're in, 150 odd thousand homes, we have got actually 24 customers. So these are obviously big kind of enterprise customer relationships.
Right. And what's that total addressable market if all of those customers of yours issued it to all of their customers at £5 a head?
Yeah, I mean, that's a really interesting interesting statistic. So I haven't got the numbers in front of me, so I've got to try and remember how that's increased recently. So it was about, so don't quote me on these exact numbers because it isn't in front of me, and so I won't get them exactly right. But look, last time when we did a trading update, I think the addressable customer base was about 4 or 5 million. But since we signed the recent US partners, we signed one partner that on their own, they've got to about 7 million customers. So I think the addressable base at the moment is about 13 or 14 million customers. Even if we didn't sign any more partners. So in the US, I think we're growing about 400% per year at the moment. And we only started like a year or so ago over there, but we've already signed partners in the US. In the states where we've already got plumbers and we're already active, we've got about 6 million homes that we could get into in the US, even in that existing footprint of US states. So the 100% the priority for the team right now. We will continue obviously to sign new partners, and we've got a lot of traction. But our number one priority is just continuing to execute well and driving penetration into that existing customer base, especially in the US, because this can already be a very big business, even if we didn't sign another partner.
Okay, and we can get into the weeds about the types of agreements and opt-outs and so forth, but I think for now that's going to be a really good view of understanding of the technology, use cases. It's quite clear what's in it for the insurers, and you've stripped it back and made it quite simple for homeowners to say yes. Very interesting, Craig. Appreciate your time today. How are we for cash in terms of moving this forward to the end of the year?
Yeah, cash is good. So we no problems there. We've said publicly we don't see any need to raise any more money before we hit cash flow break even, which is a good place to be in. Interesting.
Well, Craig, appreciate your time today. Stay in touch. Let me know how you get on.
Will do. Thanks, Matthew. Thanks for the opportunity. Nice to meet you.